Do I have your attention? Great to see people sitting in the front rows. There's still a few seats. Please come forward because you're in for a great time, I think. Are we going to close the doors now? If you're not in here already, we're going to lock you out. And you won't hear about 3:30. I had to get that one in, Scott. Okay. Good morning, everyone. My name's Karen Walsh. Who doesn't know me? Nice to meet you. I'll speak to you later. Okay. Welcome. I've got my notes because if I don't have notes, I'll be talking here for half an hour and then I'll have to remind myself you've got notes. So good morning, everyone, and welcome to this really critical session. We've got 90 minutes together this morning, and you're not going to hear much from me after I do my introduction. You'll be pleased to hear. So this session is about social capital, social housing finance models, risks and learnings. I'd like to begin by acknowledging the Whadjuk people of the Noongar Nation, the traditional custodians of the land on which we gather today. I pay my respects to elders past, present, and emerging, and I acknowledge their enduring connection to the land, waters, and culture. I also extend that respect to all Aboriginal and Torres Strait Islander people here today. I would also like to acknowledge people who have lived experience of housing vulnerability who are here at the conference, either as presenters or delegates. Your experience really does play a vital role in the housing policy space, and thank you for your voice. And thank you to the sponsored delegate partner, Mission Australia. So this session comes at a time of unprecedented complexity as well as opportunity in the financing of social and affordable housing. And Ben Rimmer yesterday described the current policy and investment environment as a watershed moment. So I think we would all agree that we are at a very pivotal time in this policy space. So across Australia, governments and providers are navigating a growing mix of funding sources from ground leases, land transfers to operational subsidies, debt models and strategic partnerships. The Commonwealth is funding community housing providers and public housing agencies to develop social and affordable housing through a variety of programs, and I expect many of you here today are involved in those and you're eager to hear more. So today we are very privileged to be joined by 3 exceptional speakers who bring deep expertise and leadership to this conversation. Scott Langford from Housing Australia has been a driving force in attracting institutional investment into the sector. And now at Housing Australia, he continues to lead national efforts to scale up social and affordable housing delivery through innovative funding mechanisms and cross-sector partnerships. Welcome, Scott. Lee Monik, Chief Governance Officer at CHL, is a seasoned legal and governance professional. Lee will guide us through a range of mechanisms and particularly SPVs in housing and service delivery, which is an increasingly vital tool for managing risk and structuring complex projects. Welcome, Lee. And Shaun Whittaker is a partner at Hall & Wilcox, one of Australia's leading advisors in the housing sector. He's worked across every major federal and state funding program over the past decade, and he will share insights into the comparative risks and benefits of our funding models. So together they will help us navigate and explore how housing providers and investors can choose the right financing models and also to look at the risks and the benefits and what we all need to look out for with our eyes wide open. This is not all about, the good stuff. It's about the hard stuff. It's about the risks and the benefits. So collectively, I think their insights will inspire us all. So our panel members will speak for up to 10 minutes, but I understand they've only got about 40 seconds each. So, that will actually leave a lot more time for discussion and questions. And I do welcome you all to ask some questions and be a bit controversial. Don't be shy. You don't have to give your real name if you want to ask a difficult question.
Impersonation.
And please ask about 3:30 as well, okay? At least one of you. I've planted a few Dorothy Dixers in the audience, but I won't tell you which ones they are. So anyway, let's get over to the panelists. And when you do ask your questions after, please introduce yourselves, because this session is being recorded and we want to know for future reference. Okay, thank you. Over to you, Scott.
You're a hard act to follow. I want to start with why. So, a very brief story. The 1950s, Jack and his family arrived into Port Adelaide in South Australia. And like many people who were working families at the time, they moved into public housing. And that was a place that they could afford to rent. It was a place that gave them stability and the ability to be part of a community. And in the case of Jack and his family, it gave them the ability to save up to go on and to buy a home. And it was at a time when the public housing system and the various levels of government were investing to the extent that, right through to the 1970s, I think in many states, the public housing system was a big part of the production of new housing. In fact, in New South Wales, 1 in 5 homes, South Australia, tens of thousands of homes being built. And it was also a very big part of the overall system that provided rental and stability for a lot of people, both as a place of safety for those experiencing significant disadvantage, but also for those who were stepping into an intermediate, needed somewhere affordable to rent, be in their communities and move on. And I know in the case of Jack and his story that start in public housing allowed his family to get into home ownership and to go on and create generational opportunity. And I know that because Jack was my grandfather, and I know how significant that opportunity, that first step on the ladder in the housing system was to my family, and the privileges that that's brought with it of having had that start for our family in Australia since the 50s right the way through. But I also know that the broader story of public housing has been one of a very great system that has served so many people so well, but for 40 years across governments of various forms at all levels has had underinvestment or a change in the investment priority, perhaps also at a time where fiscal priorities have changed for governments. There is different models. And so the why is really important when we start talking about the role of institutional, role of private finance and social capital in the social and affordable housing space. And it's because the need hasn't gone away. And in fact, there's been a void that has been created as the proportion of the housing system that was once served by the public system, almost completely by the public system, has needed to find other ways to bring in other actors to the system to create social housing and also that intermediary products of affordable housing. And that need and that moment has grown more significant and larger. And over the last 10 or 15 years, we've seen a growing appetite from government to support emerging different models, and in particular the central role of what the community housing sector can bring to the table in partnership with government as a bridge between the public sector and the private sector. And the scale of the demand for capital is significant, because for all of the bright minds in this room and all the other participants in this event, I don't think there's anyone that's come up with a way to deliver housing that doesn't cost any money. Bricks and mortar cost money. Land has a value to it, whether that value is ascribed by the public system or otherwise. You need to find ways to mobilise the value into a particular purpose, to social and affordable housing. And if I think back over the history of what's now Housing Australia, but what started as NHC25, the purpose of that was to start to create a mechanism for intervention to help stimulate private investment into the social and affordable housing space. Not as a means, and not in an end in itself, but as a means to an end, and that end is the provision of much needed social and affordable housing for tens of thousands of families right across Australia, and a diversity of people, a diversity of household types. The Leptos review that was done into what was then NHC25 looked at the next 20 years and said, if you took a reasoned estimate of how much capital would have to be mobilised to begin to address the need, and it forecast something in the order of $290 billion. Now, as I look out, and I've spent time in the housing space on both the provider side, but I had the opportunity to work with colleagues in the US, the UK, Canada, and looked at all those other markets, you start to see the emergence of two kind of key big drivers. One is that most Western economies, the role of government has changed, and the tendency now, and this is not a political or policy comment, has been towards more catalytic intervention and creating policy settings that get the best of the private sector, and in the case of housing, also bring out the best in the community sector. And that's been a trend you see across a number of Western economies, but I think is also something you can observe here. And you look at analogous spaces like the agenda to decarbonise and the like, and there is a role for government, but there is also a significant need for capital from the private sector. And then the conversation becomes, how do you create the right safeguards so that the public good, the social and community good, is appropriately managed through the longer term? And I guess my observation that I wanted to talk about today as we get into this is that the interventions, be it through Housing Australia or through other levels of government and other programs, are starting to build a momentum that is seeing an increasing interest and participation from the private sector, from investors, but also the emerging and really important role of community housing as that long-term stewards, which will maintain the social licence for what we're all trying to achieve. And what we're trying to achieve is to come back to it so that people like the modern day version of the person like my grandfather can find somewhere affordable to live, or someone who's faced with the really tough choices that we know so many people on the social housing wait list are today. The why really matters, and our job is to translate that into a proposition that, to talk cold hard facts, is investable. Because if we're going to make a meaningful and systemic shift, we need significant amounts of capital to be mobilised to do that. And certainly through the programs that we're involved in, we are seeing that emerging significant appetite. And the momentum is building. You know, in terms of the HAF, which I will comment on, maybe not round 3, Karen. Interesting way to end my career if I did. The momentum is building. We are 25% of the way into a 5-year program that has a target of 40,000 homes, and we've committed capital from Housing Australia to 46% of that target. That's 18,650 homes. There are many projects coming out of the ground. There's some that have delivered. And what has been really impressive has been the level of innovation and commitment from the community housing sector and private partners to have more sophisticated conversations about risk, to have more sophisticated conversations about mobilising that capital, recognising that most private capital, the deep pools of it, are going to need to earn appropriate risk-adjusted returns, but that needs to be a mutual conversation about how to get the right product design to get capital at scale so that we can get keys indoors, and that ultimately it's about the people that are going to live in those homes, and with the foundation of that home can use it as an opportunity to connect to all the other things in life, to be part of a community, to participate in the economy, education, training and the like. And I look forward to kind of unpacking some of that further, but I thought it was really important that I start by observing that the why is what really matters, and the why is there is a significant need and there is a massive opportunity, and I agree with Ben's assessment that I think we are at a watershed moment in time. And I've been in this space for a long time, and I don't think there's been a more exciting time to be involved. I think each and every person in this room's got an opportunity to shape what will be a big systemic shift for better.
Thank you, Scott. That's really set the tone for Lee.
Thanks, Scott.
Thank you.
I think what you speak to is the need to develop at scale. there's a significant problem, and what we all recognise is that we need the capability as a community housing sector to be able to meet the challenge and develop at scale. And I think the historic shift from grant-based funding to availability funding has provided that revenue certainty for us to be able to have a conversation with institutional capital to come in and support what we all need to do, which is develop at scale. But not only develop at scale, being able to develop on time and on budget with certainty for the partners that we're engaging with. At CHL, we currently have 3,000 units underdeveloped nationally across 50 projects. That's on top of another 6,000 in our qualified origination pipeline, which will add to the existing 12,000 properties that we're developing. That gives you a sense of the scale at which we're looking to operate to support what is the challenge in front of us. A good example of that is a project here in Subiaco East on Whadjuk Noongar country, where we're collaborating with Development WA, Department of Housing and Works, Housing Australia, to develop 447 new homes for our community. The critical aspect of this project, which I'm so proud of, is the fact that community housing is at the centre of it. We're the controller of the SPV, we're at the centre of the project, we are the sponsor, and those are the types of projects I think we are more and more interested in championing, where community housing is at the centre of these projects. But to be at the centre, we need to have the capability and the capacity to be able to take on those skills and those responsibilities. As more leveraged capital comes into the sector, as property portfolios increase, there's going to be a new level of responsibility that we all need to step up to. That responsibility demands greater sophistication in governance, in risk management, in special purpose vehicle management, in contract negotiation, and importantly, an aspect I don't think we speak enough of, operational readiness. Being able to step up and take on 1,500, 2,000, 3,000 units one day, and next week be able to have them tenanted and operating at capacity, so we can present ourselves as credible partners to government and credible partners to the institutional capital that wants to put money into our properties and seek a reasonable risk-adjusted return, but ultimately driven by us with purpose always at the forefront of our decision-making. So we're looking to be commercial, but with heart. And I think that is the incredible value proposition that community housing has for government. Unlike the private sector, we need to be able to demonstrate that we have the capacity and skill set to meet the challenge to the same extent that the private sector does, but doing so with heart will always present us as the best opportunity for government. And I think that's what we need to focus on in terms of delivering that message to what is sometimes a very sceptical public, sceptical media, in terms of selling that message why community housing is so central to this narrative. So at CHL, we're investing in systems, investing in our ability to negotiate with a position of knowledge, in terms of understanding what that risk-reward equation is. And that's what I think the whole sector should be focusing intensely on, so we can look to protect the long-term value for our community and for the public's money that is coming to us to act as stewards of in the long term. Shaun.
Thank you.
Those who know me know I'm not backwards in coming forward. What Scott said, is right. We've got an unprecedented opportunity. Lee said the nice words about taking that opportunity. I think genesis of this session originally was to, and since the creation of MIFIC in particular, and Housing Australia, there's been a huge boom in funding coming into the housing sector. But as Karen set out in her first, in your introductory stage, it's just coming in a wide range of different, sources and structures and different ways it's coming into the sector. And since 2018, when, it really kicked off, we've been across hundreds of deals, tens of thousands of properties across the country. We thought this was a good time just to reflect on, okay, what's worked? I mean, should we just keep charging ahead with what we're doing or creating stuff on the fly, or should we really just have a sensible discussion about, okay, what's really working here for the sector? Building on what Lee's talking about, bringing community housing providers to the centre of what we're doing, bringing control back to the all-purpose sector. You can get run away with a narrative of private institutional capital coming into the sector, and we've seen some politicians and others get carried away with that, and Scott's got his hands full with that. But really it's talking about the programs, the documents, the structures, the risk allocation, who's in this, who hasn't. And so here's a list that I wrote down before we did this. And if anyone else, I'm sure all of you are living under one of these structures. Acquire and develop, turnkey, build and operate, land transfer and development, land transfer and management, ground lease, build and acquire, development fund through, acquire and develop, salt and pepper acquisition, develop contribution. And within this spectrum, all kinds of variations of funding, 100% grant funded, grant and subsidy model, subsidy only model, land only model. So within that, it's a really complex environment for anybody to kind of navigate. And every time there's a new tender or a new bid, we're dealing with something different because I'm not really sure we've thought about this. So I thought, given our experience, what's worked, what hasn't, and maybe what's missing. So just quickly, if you'll indulge me. And I might get thrown off the stage after this. What's worked? Subsidy-backed deals clearly work. They've been successful, and they're very successful attracting non-government funding. I think we can all agree that's probably set in stone, and I think the state governments and obviously Housing Australia who do that work, have worked out that that's how we're going to attract capital. What's also worked? Projects where funding packages, either from government or wherever, are set or fixed, a post-DA and a preferred builder locked in with a D&C price. We have seen so many projects fall by the wayside because of capital being locked in at some approved amount within the government and then not being able to move from that amount because the time it takes to get to financial close, get a builder on board, get a price locked in, get a planning approval, change whatever's in the planning approval. Is killing the ability to get keys in the door, to quote Scott. Funding programs that have a limited time frame for assessment, notification of outcome, and a clear time frame to financial close are very successful, unsurprisingly. So the ones where we've had 12-week programs to do a bid, and then another 6 to 8 weeks to get to close, and we know exactly what we're building, and it's very clear. They're the ones that have been successful. They're the ones that have delivered the developments at scale. Now, what hasn't worked so well? And it's not so much that haven't worked so well, we should just maybe rethink how we're doing this. One-off capital contribution deals, it's very hard to bring in private capital investors in one-off capital contribution deals from state governments. If all you're getting is a 70% grant and then nothing else for 35 years, it's not bankable, generally speaking. It's very, very hard to make it work. It's also harder to make it work when there are significantly long periods between the bid phase, for example, and then fixing your D&C price. So, for example, if there's a site out there that needs contamination works or civils or planning approvals and things like that, these take a long time and it becomes very hard. I'd also say that hasn't worked is an extremely high focus on vacancy assumptions, which is kind of building on what Lee's saying about the world now trying to transition tenants into large-scale housing developments using data from, I guess, current vacancy rates amongst housing providers and historical vacancy rates really doesn't reflect what it is like on the ground to put 250 tenants into a dwelling or a set of dwellings on day one, or within a month, or within 2 months, or within 3 months, particularly in the era of the current sort of construction vortex that we're in. No builder barely filled, builders sometimes finish early, sometimes finish late. They really finish on the exact date they're supposed to finish. And it makes it incredibly hard to transition tenants, to mobilise, to do all those things necessary to build people. And of course, we're not just moving social housing tenants anymore, we're moving affordable housing tenants, we're moving market tenants, we're moving people in the public who don't want to sign up at least 6 months ahead of what when they're going and then be told, actually, you'll wait another 3 months and another 3 months. So we need to work structures. What's actually achievable? What's the message on the ground from the housing providers? What are they achieving? What's we're starting to see some of them come online. Let's use our really live data to influence our financial models. And then the last one that all the government people won't like. Treating surpluses and divestment as dirty words. We are at a pivot point where we can take advantage of an incredible boom in housing funding, but we are not setting up financial models and structures to create a circular economy where the deals struck today will fund the deals 10 years from now for all of you guys. We are focused on a project by project, financial model by financial model, value for money by value for money criteria, that we are passing by that opportunity to look at how can we create surpluses within the housing provider, within the project vehicles, to reinvest, to recapitalise, to divest, leverage, release security, get things going so that in 8 years' time, in 10 years' time, the houses of today are the ones we're using to build the houses of the future. And we're not having to sit here hoping that Housing Australia is running half round 9 so we can build new housing.
Hope they're a bit quicker than that.
Thank you. So hopefully, I'm sure this has generated and inspired some of your questions and thinking. So what we've heard is this is complex. We know what the need is. We know why we are looking at delivering social and affordable housing, and we need to do that at scale. We know that it's complex. It's not linear. It's backwards and forwards. And at the forefront, I think Scott talked about the why. It's the people. It's not the bricks and mortar or the capital or the finance. We are doing this for the people that need housing. Therefore, it's not like building a bridge or painting a door or building a wall. There's human beings with different needs and changing needs within this situation. So talking about capital and finance when there are human beings in the middle of that equation, it's very, very complex, and they need to be at the centre of this. And I think we've certainly heard that already this morning. So one of the, I'm going to ask the first question and respond.
You're going to ask and answer. Well, we can go.
I could answer, but, I might get thrown off the stage before Shaun. A lot of commentary has been about we need social and affordable housing delivery urgently. And we've heard about the complexity of tendering processes, the time and resources, the cost particularly for community housing providers. Every dollar that they have that they can put back into their housing is a dollar well spent. And we know that many community housing providers have said they have spent a lot of money on tendering processes that is unnecessary and too much. It takes their eye off the core business. They're spending a lot of time on tendering and a lot of money paying for expensive commercial lawyers and others.
Great value. Is there a question here?
Yeah. I'm just setting the tone, Scott. So what I'd like to see is, and I'm sure, would people in the room like to see a bit more simplicity? Put your hand up if you'd like to see more simplicity in this. Okay, there you go. And yesterday, Jodie Braun and Shane also talked about, particularly for First Nations communities, that it is convoluted. It is, how do we get a simple process that has still got the procurement principles and all of the above included, but it doesn't mean that people are concentrating on that for months and months and months, almost as long as it's going to take me to ask a question. So, Scott, would you like to respond to that, to give us some certainty or confidence that things are changing and that you have heard? Do you want me to say it again, or?
I really don't. I really don't. So, Karen, let me start with firstly an observation. I think there would be very few people that would dispute that scalable, replicable programs are the most likely to get efficiency over time for everyone. So to make it uncontroversial, if you look outside Australia and you look at, say, the US, the low-income housing tax credit's been around since the 1980s. What that program did was it built a social licence over time through proof of delivery, and it became a regular part of the housing system. It's survived administrations of all flavours, even the latest one, and has enjoyed broad political support because an ecosystem developed around it of people that include housing providers, capital, developers, builders, and they know by and large that every year there will be X amount of tax credits released and that it becomes a regular part. So there is still a competitive element to it, but it is a regularised element. Now, part of the ambition of the HAF was setting a 5-year program with 40,000 targets, steps towards that as a mechanism. And there are other programs around the country that I would observe and don't have the knowledge to speak about, but some state level programs that are starting to try and create that underlying certainty that there is going to be funding available. So that's part one. The second thing I want to observe, and I'm only a year into working for government, so I'm on a learning curve, and I've got many talented colleagues that are very kind and generous with their time, particularly in Commonwealth Treasury, that have much deeper knowledge of this. But there is partly the procurement program does need to reflect the significance of the investment being made. So at 30 June, we publicly said that we'd committed funding across rounds 1 and 2, which includes the committed term of 25 years of availability payments and the upfront concessional loans, and it was something in the order of $14 billion. Now, that is an enormous amount of everyday taxpayers' dollars that the Commonwealth is pledging to this issue. So as much as I would like to say that there's an easy way to kind of go, well, every player wins a prize and here's the easy formula, I think we have to recognise that procurement is necessary to create some level of value for money, and that there's an expectation from the public, and that's important. Now, also, some of the expenditure that the sector incurs is probably relative to the amount of the funding that's being incurred. But I recognise that every dollar is so precious, and having run a community housing provider, I know that tough choice. Do I put this into seeking to get more, or do I put it into service delivery and outcomes now? And that's a tension. It's something that boards have to navigate and be mindful of, and I really encourage people to think about what the best use of their dollars are, and also, is this the right program for me? Because not every program can do everything everyone wants it to, and that's also a trap that I see a lot in the housing system. We try and take something that can do one big thing very well and ask it to fund everything. But certainly we've heard the message about procurement, and I would say, I want to be really clear, I've had the benefit of coming in after round 1 had been run, and I think my predecessor and his team did an amazing job of standing something up in a very short space of time and deliberately leaving open parameters to invite the market to innovate. Now, in doing that, it meant that there was a lot more uncertainty about what Housing Australia would or could fund. And I think that was necessary given the early innovation that was needed and Housing Australia needed to see from the market to respond. That meant it took a little bit longer, and undoubtedly it also meant that, by some measures, 50,000 widgets were proposed, or houses, sorry, I shouldn't call them widgets, and a smaller number were out of round 1 committed funding to. It is partly why our thinking emerged in round 2 of a very different procurement model, where we went from we can fund many things in many places at a price we don't know yet. In round 2, we worked with states and territories and we said, these things in these places for this amount of money, and states and territories really rose to that challenge. We are thinking a lot about that in terms of whatever government may ask us to do next across any programs, and the NHC25 is another example where we're trying to make it a more engaged process where in the NHC25 you can come and talk to us, it's on demand, you can have there's an expression of interest. Following that, the application, we're trying to take some of the cost out of it for providers, give greater levels of certainty, increasing certainty over time, but provide an appropriate assurance that ultimately, as stewards of taxpayers' dollars, we are being clear about the value for money of the investment we're making. So that's an equally long answer to a very meandering question. But I hope that what the key thing people take from that response is absolutely we want to make sure we're driving the efficiency in the system overall. I think there's some things that are matters, policy matters for government, but within our purview we're very mindful of it and looking to be much more directional in how we engage so we get the best outcomes and we can balance that speed and value for money together.
Thank you. That's certainty, confidence, learnings from the past. All good messages. Thank you, Scott. Would any of you like to comment on that one before we open this up to the floor?
That's right. I just say, it goes back to what I said before, it's speed. I think people can live with not winning or not being, what they can't live with is 6 months of not knowing. And it's not so much, you know, my organisation and everything I'm putting into it. It's the builders I've got on hold. It's the developers I've got on hold. It's the call options I'm sitting there on. I'm being asked every day, when am I getting a decision from government? And this, by the way, this is just happening in Australia. This is every level.
Yeah, let's share the love.
Yeah. It's a bit unfair, but Scott's sitting here.
I think Simon's sitting in the back of the room there.
Going back to what I said, the procurement process is where there's a fixed time frame that sort of you put your submissions in, they're either yes, no, out, in, let's go. And people can live with that because what they can do is they can pivot to the other program. What happened with HAF round 1 is we sat there for a very, very long period of time when we could have been putting them into state government programs, we could have been putting them into other programs that were available at the time or coming up, and they were lost to those opportunities. And so now we shouldn't repeat the same mistake. That was a mistake. We should learn from that and try to drive it forward and simplify the process, as you say, Karen. Because I think people can live with that. They can live with a decision. It's the uncertainty. It's the not knowing when an announcement's going to be made or when things are going to be that people sort of struggle with in terms of getting those real numbers and real projects on which are my best, which are my sort of putting everything in, which are my best 3, which are my best whatever, and if I don't put them in here, move to the next program and move on. Because everyone in this room is fantastic at doing that, fantastic at generating projects, fantastic at generating opportunities. We just need to find a home for them in a timely fashion.
Yeah. Thank you. And every time I've heard Scott present, he does give me reassurance that Housing Australia is listening and taking on people's feedback.
The one thing that we haven't had a shortage of is feedback. And I'm very grateful. You have been heard. If you feel the need to tell me again, I'll be out the back trying to run away.
Thank you, Scott. And we know that the sector is being heard. And keep giving the feedback because it's all really good data. So I'm going to open this up to questions from the delegates from the floor. Who would like to go first? Okay. So if you could introduce yourself.
I don't think we need Mike, Scott. You're going to get them all.
That's all right. I'll make sure
Watch me do a hand pass.
Panellists all get an opportunity to respond. So if you could introduce yourself, please.
Hi, my name's Michelle Twigger and I'm the homelessness networker in a region of Victoria. But I started my career and lived many years here in WA and worked in the sector here as well. So my question is probably more for Shaun. One thing we've been pushing for the Victorian Homelessness Network is an ongoing pipeline of funding for housing so that we don't find ourselves in the situation we're in today. So my question, I guess, I have 2 parts to my question. Firstly, is there best practice internationally that we can look at, that we can promote, that we can all advocate collectively for, we can educate the government with? And secondly, kind of related, thinking of Scott and your story about Jack, we find that now many people are going in transitional housing, which we don't know if there's still a model, if it's still viable, because it's not transitional, because there's no exit pathway. Opportunities for those people, many women escaping violence with children, to then purchase that property. So that ongoing pipeline allows people to stay in that community that they've been living in for some time, establish community connections, schools. So a part of that model is that people can then, if they can afford rent, surely that's a loan repayment to purchase that property. So maybe related, maybe not, but just your thoughts, please.
I might not take the international, but I think there's some really good examples nationally in terms of how pipeline funding can benefit outcomes for community housing and homelessness housing or transitional housing as well. There's a couple of models in Queensland. The Queensland government has the QCHIP program. There was the HIF pipeline program recently. I think the real benefit of those types of funding models is being able to develop a relationship with governments. So the conversation doesn't stop funding round to funding round. I'm now going to submit for one program, not get a Guernsey, then, you know, dust myself off and then go in for the next one. You develop an ongoing conversation with governments. You can understand what they're looking for and they can be honestly reflective with you about what it is that they're looking for and whether or not you can support that. So I'm a big fan of pipeline funding models for that reason, and I think it's something that we can encourage all parts of government, Housing Australia included, to look to support more of.
Yeah, just on your point about the selling to tenants who've been in that place for them, it's a bit of a deeper discussion. There are build to rent to buy models and other bits and pieces like that. But I think it goes back to what I said before about divestment's not a dirty word. That it could be divestment to a tenant. We don't think about that when we talk about divestment. I can sell it to the public. Well, that's not always the case. There's no mechanism for me to do that right now. And you might, the government people would say, well, just come and tell us. Well, of course we'll do that. But it's not as simple as that. 10 years from now, when that tenant wants to buy the property, you're dealing with a whole different set of people who don't understand what the original deal was. So those levers, those mechanics, they're good things to bring in, like building on a pipeline and then building on a divestment program to tenants or to other people, give them that opportunity. I think there's got to be careful there because there's a difference between offering the opportunity to purchase it versus providing financial assistance to purchase it, which are two different things. And I think people get caught up in that split. But yeah, it's certainly possible. And the pipelines are great because it's ongoing, it's regular, and you kind of know there's funding there. But it's also what Scott said before, setting up those, like the US example of setting up tax credits every year, there's something there every single year, there's something available for that type of thing. Transition accommodation is very, very difficult to fund on a non-grant basis, basically. You are literally having to, have the government pay for everything to get it off the ground. No, but if you were building a transitional dwellings to use it for that purpose, but then that doesn't mean they can't move on into that housing spectrum, into social and affordable, and then, so that's kind of what you can look at there.
Do you want to respond, Scott? No. Okay. Okay, thank you. There are models where tenants can purchase the homes that they're living in, and that would take a whole nother session to talk about that. But there are actually some models, but it's a bit patchy. There isn't, it's not a whole of Australia, every state and territory doing that. So, but it's good to know that there are models that enable tenants. And Head Start Homes is an organisation that that does have such a model where tenants can move into affordable rent to buy, and there is support from government agencies that facilitate that. So it's a good opportunity. Did you want to ask a question? Okay.
Andrew Elvin, Coaster Bay Housing Group. My question's about future direction, where all of this is heading. Because we had a very interesting session at the end of yesterday that said, is supply the silver bullet? And basically what the panellists said is, well, it's only half of the equation, but it needs to be, essentially, it needs to be targeted. And so what's interesting is that all of this work now is in Treasury. I'd like to ask, is there despite all of the programs, is there a concept that we need to actually develop non-market housing to a level in Australia that allows affordable living to become the outcome rather than numbers? So I suppose what I'm sort of saying, the target for the nation is 1.2 million, but should that be targeted more than the 40,000, social and affordable homes to actually make a difference for affordable living? And is there commentary from the panel about where all of this might be heading?
Thank you. And is Viv Milligan here? Hi, Viv. I think Viv came up with a really good, call to action yesterday at the First Nations session, which was about looking at, instead of 11,000 tenancies being managed by Aboriginal organisations, how do we actually get that to 50? So that First Nations tenancies, so you actually change the performance indicator from the big numbers, and you actually come up with a number that is going to have a significant impact. But it's not, it was a really good call to action, Viv, and I think that was a great question, but it was a great opportunity within that session to change that narrative. Thank you, Andrew. I'll put that to the panel. Scott, do you want to answer that one first, or Lee?
So I preface this by saying, for the avoidance of doubt, it is colleagues in Treasury, so some of you heard from Ben Rimmer yesterday, that lead the policy discussion. And so it's not for me or for Housing Australia to have a particular view on policy, which is largely the question you're asking. But I think to emphasise a point I know Ben made yesterday, the housing accord targets are a commitment between multiple levels of government and multiple actors in the system. And I think that a natural consequence of that is that there is opportunity for that discussion to evolve to say, well, what is the right market construct? And I'm yet to hear anybody that's arguing that the market is the overall housing system is working well for everyone, or there's a limited number that it's working well for, so it's working for some. I think there is a very strong focus, and certainly within the Housing Australia's remit, a very clear focus on increasing the availability of social and affordable housing. And that's the tool we'll continue to use. But I think it's a relevant conversation about the system structure over time, and go back to what I talked about at the start, that for a long time public housing was both a big producer of housing, full stop, but also a big owner and operator. And I think it was, Viv will know the number, but more than 7% of the national housing stock was the peak, something of that nature. We're in the public housing system, and we're now down in most jurisdictions to closer to 3%. So I think you see the presence of that in the fact that we're now needing to think more about affordable housing. I think we get a lot caught up in definitions, and I think there's further work to do in what all these bits along the continuum mean. But in very simple terms, Andrew, I think about the fact that we want any Australian to be able to find housing that is appropriate to their age, stage and circumstance in life, and I think we're some way off that. But I missed the panel yesterday afternoon, but my personal view is supply has to be a big part of this. I absolutely think that targeted supply has to be a part of this, and that's obviously the mandate we've got, is funding into that part of the equation.
It's an interesting question. Is supply the silver bullet? It was a really interesting session yesterday. I think supply is the silver bullet for somebody presenting at one of our 30 offices nationally who needs a home. So, and as a community housing provider, those are the people to whom we are responsible for which, we come to the office every day looking to fulfill that purpose. So supply is the silver bullet for each and every one of our customers. However, stepping back and looking at the broader policy setting, there are bigger policy questions about wealth inequality in this country, about the concentration of properties in fewer hands, around the tax setting that, is perhaps beyond the cold hard face of what we look to affect every single day as a community housing provider, but absolutely has an effect on the overall position of affordability in Australia. and the availability of homes to those who need it. So it's an important conversation, it's an important question, but at the same time, I think about the people that we look to support every single day, and supply is the silver bullet for them. So what we can look to do is increase that supply, having more properties at our disposal to meet that challenge, to meet that wait list that stands before us every day.
Could I do a follow-up?
Certainly.
The reason why I asked is we have
Need
to...
the mic, Andrew?
We have to land these programs successfully between us so we can get to the long-term strategy about this has to continue. It can't just be 3 rounds and that's it, you know, of a program. It has to be a long-term commitment. And so I think we all have responsibility to actually make the programs work and to demonstrate that they work. Otherwise, we've missed our opportunity.
Well said.
Can I have my mic back?
No, actually.
Yeah, thank you. Thank you, Andrew. Good point. I think there was a question from the person at the front. Yeah, and it's about that targeted supply and the services and the supports that are required to sustain tenancies, not just numbers. Yeah. Thank you.
Hi, my name's Elise Holmes. I'm from Common Equity, so co-op housing. My question, maybe for you, Lee, around here for community housing in the room, is how are you addressing and mitigating risks of interest rate risks for the future when interest rates, if we've invested in, traditional institutions, the volatility of those interest rates, how are you mitigating or how can you advise community housing in the room for those risks for the future? HAF3 is coming up, so...
Yeah.
We need to think about these things, so thank you.
Oh, big question. I might be handballing this to Shaun in a moment. I suppose 2 ways. One is negotiating fixed-term interest on financial products, and where we can't negotiate fixed-term interest, hedging against the interest rate exposure. So that's, I suppose, the simple technical answer. Shaun, any comment?
Crop loan.
or increasingly state treasuries getting involved in that space, funding construction costs. We've seen that in 4 out of the 6 states already, partly because construction funding is so hard to get and it's risky, and then partly because they can offer it at a really cheap rate. But that comes with that, that risk. You've got to refinance it at a certain point in time. So how do you manage that risk? Well, obviously, as Lee said, you try and use a fixed price product, but it's not always available for the entire tenor. Yeah. So there's a risk there that you have 3% interest rate. The treasury disappears at year 15. What do? Well, I think there's an expectation that there's a refinancing risk at the time, but you are refinancing hopefully in that stage with an asset that's actually performing, tenanting, renting. So your rate you get today would be different to the one you get in year 15 because it's actually a better asset from a bank's perspective or from a credit provider's perspective. So the refinancing risk, and this is common on all infrastructure projects. This isn't just housing. Mm-hmm. We carry that refinancing risk, whether it's a 5-year, 10-year, 15 years. We have to refi every 5, 10, 15 years. So it's not uncommon, and I think there's ways to navigate that over the journey.
I suppose just to pivot slightly, I mean, that's a really good example. Your question points to, those levels of complexity, capital management being, I suppose, a new terrain for community housing. As our debt book grows internally, being able to manage multiple financiers, is becoming a very important risk for us to think about, to bring in the appropriate resources to be able to have those conversations internally with boards, with executives, with financiers, to be able to navigate what is an increasingly complex terrain as we take on more and more debt, leveraging appropriately and responsibly to be able to build at more and more scale.
I wouldn't mind just take the opportunity to kind of broaden the conversation out from interest rate risk to broader discussion about risk. And, you know, there may be questions on this, but I think I'd be interested to hear from the two of you as well. I mean, we are very interested in the discussion about risk allocation and who's taking which bits. And I think you allude to the capability and capacity within CHPs to manage various elements of risk. And I think that is something that we see an emergence of very many different structures that we would encourage community housing leaders and their boards to be having really detailed discussion. Firstly, do you know what risks exist in the project? And really, who is actually the owner of those risks? Who does it residualise to? And it's not just interest rate risk management, it is all of the various elements that go into both the financing solution, the development solution, and what's your capacity to bear that? Because one of the observations I'd make is that a really core role of the community housing sector is to be the long-term stewards of outcome. And so in doing that, it's making sure you're not taking on risk that the private sector might be trying to shove your way, that if it manifests is going to put some of your existing mission at risk. And that notion that, the balance sheets that most CHPs have got, when we talk about, well, there's a lot of equity in the balance sheet, I say, yeah, made up of people's houses. So if risk manifests and you have to create liquidity, cash, the thing that you've got to do is go and knock on someone's door and say, I'm real sorry, but we're going to be selling up so we can fund a development risk that's manifested. Yeah. So it's not to say that the sector couldn't, it's not to say the sector shouldn't. In fact, I strongly encourage the sector to take appropriate risk because it's a way to create value and be a really important part of the solution and creating that for the long-term interest. I'm really just encouraging a very explicit understanding conversation and really bringing it back to how does it challenge your purpose if it goes wrong? Because the way the private sector thinks about risk is to price to risk and assume that one day it will manifest. And they price that into the way they work. And I encourage colleagues in the community housing sector not to underprice risk, and that means also think about, well, where is my source of curing this? Because the financial consequences should not compromise the people that you are charged with looking after for the long term.
Yeah. And can I, before you jump in, Lee and I were talking before about that, the nature of risk, and in a competitive environment where community housing providers are seeking to grow, to get scale, how do they balance that competitiveness and growth with really pricing in risk and knowing what that actually looks like for today, for next year, but also on long-term projects, what that looks like in 10 or 20 years, and being very mature and aware of that, and knowing what the costs and risks are, to long-term projects. Because again, going back to your point before, Scott, it's about people, it's about Jack. They're the people that are going to, be impacted if we don't actually cost that risk in properly.
It'd be interesting in your comment. I spend time advocating and saying, I think we have to start from the premise the CHP sector's got the sophistication to do this and assess it well. Yeah. And I think that places a lot of responsibility on the people in the sector to also have the discipline to say no.
Yes.
And I think one of the challenges of the funding models, all the acronyms that and the usually four-letter acronyms, four-letter words, but it can create a sense, and having run a provider, a sense of the FOMO, fear of missing out. So you take stuff on now because you're not sure what might be coming next. Yes. The discipline and the sophistication to have a strategy and say no is just as important as what it's going to set for the long term. But I'd be interested in how you think about it.
Yeah, I couldn't agree more. I think understanding risk allocation is absolutely critical. What doesn't help is the absurdly complex contracts that are being put in front of community housing providers in terms of then being able to dissect where the risk lies, because the devil really is in the detail. So, but at the same time, that's the reality that we're facing. So, you know, you can speak about principle-based contracting and wish for simpler contracts, but the reality is that these are complex beasts, and we do need the resources either internally or externally to understand the risk position that we're taking on, but we also need the experience to understand how those risks play out. What we don't have is the experience to see how they play out over, 20, 30 years of an availability period. And, sitting down and having a conversation with your board, with senior management, to think about and stress test the assumptions in your models is absolutely critical. And to also, I think, be driven by purpose in terms of advocating where that risk sits. Should all risk come to the CHP because it has the balance sheet as the operator, or can we argue for better deals where risk sits with the special purpose vehicle, or dare I say it sits with equity, the people who are funding these vehicles, so that some risk
or with
can
government.
Or with government, absolutely. But I think from my perspective, or from the CHP perspective, I think what we need to think about is the value proposition we bring to the table. So being able to demonstrate again that we can deliver on time and on budget at scale enables us to have better and stronger conversations about why we should be at the centre of these deals. And being able to continuously demonstrate that, I think, provides us a far better position to be able to navigate those risk questions. And let's face it, compete with the private sector who's been doing this for a very, very long time. So I think that's an essential part.
Thank you. Did you want to comment on that? No? Okay, Andrew. I think Andrew was next, were you? I'm not watching, but I'm picking you, Andrew. Oh, it's someone else. Sorry, you got gazumped. You'll be next.
Oh.
Thanks, Viv.
I've got the microphone. And you gave me the shout-out, Karen. So Vivian Milligan, and it was in a context yesterday that we were talking about government and government commitment and Aboriginal and Torres Strait Islander aspiration to self-determination, yes, and housing being critical in that, and that was why I was talking about let's have a plan and let's then work out how to achieve that plan using the various opportunities that there are. But I sort of want to springboard off that, because I think to solve that equation in that sector, which is a very challenging one as we know, we need to tease out more what we're talking about here when we're talking about scale. The panel's talking about program scale to meet a very big problem. They're talking about financing scale to match the appetite of the private sector. But I want to talk about project scale and diversity and how you get housing into remote communities, regional communities, small communities, how you get small-scale projects to meet particular needs, like for older people, and whether the program mix that we've got at the moment and the approach, with all of the things that you've been talking about, that some large community housing providers are definitely getting their head around and definitely succeeding in, is that going to be sufficient to support the diversity we need? I think Rachel said yesterday, we've got to address needs in Darwin, in Perth, we have to address needs in remote communities, we have to address needs in regional Queensland, in communities with seasonal workers. We've seen the pattern of localised need, which is very diverse. I don't think where we're going at the moment gives me confidence that we're going to be able to respond to that diversity of need with just the approach that we've got, which talks about big numbers, big scale, big efficiencies, big capital. And although community housing is really well placed, and Aboriginal community housing could be well placed to deliver in those places, their capacities don't match what's on offer at the moment.
Yeah. Thank you, Vivian. So how do we meet the needs of Jack and Jill that live in remote or regional communities? Do you want to answer that one, Scott? Or someone else?
So I don't, first going to say I don't have the answer, okay? And I think in terms of the Housing Australia mandate, one of the observations is that the HAF is well suited the mandate talks about doing potentially a whole range of things. It doesn't set specific targets other than for some geographic distribution targets, being minimum of 1,200 in each state or territory. I think we colloquially refer to it as the Jackie Lambie clause. But I think it is possibly one example where I think the hope and the expectation that a single funding program can do everything well is possibly mismatched, and needs to be managed. Like, I think that what the HAF can do well is help raise capital up front and then pay it over 25 years. And that doesn't always suit all the various potential models and outcomes. And particularly if we talk about regional and remote, some of the HAF money, so the HAFF, I need to get a bit technical here, makes a distribution, that sits with the Future Fund, it makes a distribution to government. The Minister has made some allocation to the NIAA and other agencies and to some intergovernment programs to support regional and remote housing specifically, but through different funding mechanism than what Housing Australia can offer. And so the mechanism we can offer, quite constrained, 25-year availability payment, upfront concessional loans, may not suit. I've been very fortunate to, in the year I've had in the role, have the benefit of time with NATSIA and the Housing Policy Partnership have very generously shared their views and their perspectives, and we've listened a lot to that, and that is matters that ultimately government will decide about the funding model and priority. But I think that recognise that there may need to be different approaches. The comment I most often make at conferences is it's got to be about the and. So HAF cannot be the answer to everything. It needs to be and this, and this, and this, and this. And that includes state and territory programs, because to meet the true diversity, one of the things the community housing sector can do, one of the things the Aboriginal controlled sector can do is layer other contributions as well. I don't necessarily think that there is going to be an opportunity to get institutional investment to support some sorts of programs and projects, because, let's face it, institutional investors, they've got a minimum ticket size that they'll play at, and it is very hard for them to do diligence on, a 3-unit project here and a 3-unit project there. So I'd say that's not the right model. Let's find the model that's right and then make sure that there is an offering and that's thought about. We are thinking about ways that things can be bundled together to get some, you might have a collection of smaller things that forms a package. Maybe that's a strategy that we've seen providers use and that can be part of the future that helps to get some scale to get an investable support. But I think, it will be always in the housing space, the and that is going to ensure that we get that diversity. And I think that's a really important piece to hang on to.
I mean, I'll speak about demographic diversity instead of geographic diversity, even though we operate nationally and have 30 offices around the country in some remote places. But I think the opportunity for larger housing providers to collaborate with smaller housing providers who offer niche services or provide services to particular demographics, I think is a responsibility we should take on and take seriously. At CHL, we've taken on programs where we've subcontracted with other housing providers, so worked collaboratively with the likes of WPI, Women's Property Initiative, ACHL, Aboriginal Community Housing Limited, to actually give them an opportunity then to manage tenancies that focus on a particular cohort. And I think we need to be honest about, what our expertise are and who is it that we can support en masse, but at the same time, what other people may be able to do better. And I think that collaboration is a really good opportunity for us all to provide more housing to more people and feed that diversity.
Thank you. Did you want to know? Okay, thank you. Andrew was next, I believe. Thank you.
First of all, I'd just like to say thank you. A great panel discussion. Shaun talked about legacy and really triggered my thinking around legacy within this, and Lee's triggered the thinking around the risk. This is the biggest investment in social housing from the federal government, I think, since the 70s. It's a huge opportunity for the sector. But I'm worried that the federal government's going to get worn out by the negative press, by the complexity, by the we should be doing something else that's got less political capital involved in this. So we're at danger of it being a brilliant opportunity that fails because of not selling the message. I think as well, government with risk, government often gets rid of risk by introducing more risk and really compounding risk. And it becomes self-fulfilling that we don't simplify, we get more complicated. So leading to my question, Scott talked really strongly about the why, and I think the why is known and the why is sold, and everyone in this room knows the why. Yeah. But I think maybe we need to prosecute the by whom a bit more, and that's my question. Because if we have community housing providers in the middle, as you were mentioning, Lee, and we have that backed by state government, and then we expand and we scale up through good involvement with the private sector, if we get the CHPs simply in the middle, then the simplification argument, we get to social mission and social license, and we say, let's make sure we've got enough room here for the legacy, because there's no leakage. If we get this right, if there's an upside, it has this virtuous circle of providing more homes for people in need. So if we focus on not just the who, I think we need to sell the message upwards and out, that if we structure it right, this is virtuous, this is self-contained, and the private sector can get involved in scaling up, and we need the private sector, we need financiers, we need builders, we need developers, we need consultants. But stick it in the middle with the state government and the CHP, and let's go for the hills and build loads of these things. So I think a lot of it's about messaging success now, because I fear more bad publicity, and if I'm the minister or the prime minister even used to say, let's just put the money in health. Put the money in health, we'll get votes for health. We're gonna put money in social housing, and we're gonna bloody lose votes. So who's gonna do that? So how do we get the CHP in the middle of the story and sell it through Scott, into, dare I say, half three, Scott, and half nine, because we want Andrew Elvin's comment. We want this to be more than 40,000. We want to prove it up as brilliant and then reinvest. So we're pretty shit, using a four-letter word, at telling positive stories. And we need to tell positive stories.
Thank you. Andrew, I'm going to let Shaun answer this one or respond.
Question. Well said. I did a session in Melbourne Housing Conference 4 years ago, and I said, should CHPs be doing affordable housing? Because it was at a time where affordable was like the new product on top of social. We'd be doing social for right now, we're doing affordable. I think to put it another way, politically or not, there are going to be more renters in this country than there had ever been before over the next decades to come. It will become a normal housing solution for most people. We've come from a world where you rented until you could buy, and now you will rent. Or you may choose to rent, you may be forced to rent, whichever way it goes. To get back to your point about putting the CHP at the centre, we're at a pivot point now where if we don't put the CHPs at the centre, or we don't come up with models that work with CHPs at the centre, with government support on risk allocation or lender support on risk allocation, other bits and pieces, there will be other people who step in and do it for you. And so what I was saying about 4 years ago, you won't be doing affordable housing. Someone else will. And you'll be relegated to the social and purpose offerings that you have been doing really well. But the opportunity here to step into the next level, to step into the void that is just teetering right now. Because if you hadn't noticed, the build-to-sell market isn't going so well in most of the capital cities. It costs more in this country to build than you can sell it for. And that is not a good outcome. I don't understand why that's not a session in itself, anyway. Because we're all dealing with it. I mean, builders, yeah, great. But why is it so? That's just on top of acquiring the land, acquiring everything. But if you look at the planning sessions we've had around this conference, the urban activity centres that are going up, all these great planning things are going to be unlocked. The developers are looking to pivot into your space. They're looking to pivot into your area, and mandatory inclusionary zoning will come in. Other things will come in. They'll be doing affordable. They'll be doing these things. So if we don't get these programs, these models with CHPs at the core, and maybe that's looking differently at what a CHP is versus what a CHP was today or it was 10 years ago. Are we a services provider? Are we a housing provider? Like going back to the why. What are we here?
Are we all of those things?
Yeah, are we all of those things? Yeah. Are we some of those things? Are we opportunity, and that's what our organisation does.
Yeah.
Whether you're social, affordable, market, whatever, we're here to provide that opportunity, as opposed to we're a not-for-profit charity who helps people, with this. So you're right. The point's here. It's ready to go. But I would say you'll lose that opportunity to the private market at some point if we don't get these quite right over the next, I'd say 24 months is probably all we've got. And then someone clever will work out a different way to do this. The tax settings might change, the things might change, and all of a sudden build-to-rent on a mass scale becomes much more affordable for everybody else to do. And it's good for conference organisers because you get more people, but the market will explode.
Did you want to respond, Scott or Lee? Yeah, I'll just make a very brief comment before I go to the woman at the back in the green dress. I think it is really critical for the community housing sector to show off and celebrate the achievements and the growth and over the last 5-10 years, but also to like you said, Andrew, herald and congratulate the government on the investment that they've made, which is massive. It's got to be glass half full and overflowing, not half empty. It needs to be a really positive message because then there will be more. Okay, patiently waiting at the back. Thank you.
Hi, my name is Jane Matz. I'm from DV New South Wales. I'm part of the Lived Experience Policy Advisory Committee. And I'd like to do a bit of reframing. You know how, Karen, you mentioned at the beginning someone is going to be a little bit, stir the possum a bit? Yeah. Well, I'm going to stir the possum. And I'm going to say this, that I'm reading that heading there and I say social finance models at the moment is killing us. We are not supporting lived experience in financing the models that that give us housing that make us healthy, safe and able to work. I'd say the risks are that we aren't doing enough for the just-in-time modelling that's needed in relation to lived experience for housing, and there's plenty of learnings. So I put it to you, what can we do now for lived experience and people experiencing homelessness?
Thank you. Thank you for your question. Lee?
At CHL, we talk a lot about impact. What is it we're doing to create impact in communities? We all recognise that, simply building a box and putting somebody in it isn't creating it a home. It isn't supporting people's livelihood, their opportunity for education, creating family and community bonds. So I think driven by purpose and driven by impact needs to be at the centre of our decision making always. We need to be able to have a conversation about scale, about financing to support that scale. But ultimately, and this is why, to your question before, community housing is so important, it should be at the centre of this conversation, is because we're here with purpose in mind and with impact in mind for the communities that we serve, not shareholders. So I really appreciate your question, and I think it's the answer to that question is community housing providers driven by impact, ultimately.
I would add that I think one of the joys of working with community housing providers, and Andrew, because you're sitting in the front row, I'll call it that, but I know that you've got a very strong tenant advisory group. I know that is meaningful in your governance and your approach to things, as it is with other community housing providers. And I guess I go back to my comment earlier then about the sophistication and the clarity of strategy, that if that is a part of your governance model and that you then have the strategic discipline to say no to things that aren't reflective of that voice that's been built into your model, that is the sort of thing that is going to build the best long-term system outcomes.
Thank you. I'm trying to be fair and I keep missing out people, so I think we probably got room for 2 more questions. Yeah, okay.
Preeti Daga from Housing Choices Australia. Thank you for a very engaging discussion this afternoon. Lee, you mentioned about being operationally ready to mobilise a site like of 1,000, 1,500 units if you get a call from the government, just hypothetically. So my question is, as a not-for-profit housing provider, how do you actually stay operationally ready while managing the cost of the readiness when you actually don't know, the certainty of that? How do you actually get your resources on the ground when you don't know when you need to mobilise them?
I mean, you're going to be mobilising at some point. That is to say, the development might stretch out, or it might come forward, but it takes an exceptional amount of planning, of discipline. That does come with experience. It comes with, either bringing that experience in-house, so engaging external providers, or developing that capability and capacity. It's not easy, but we need to be able to do it well so that ultimately we can fill those properties as quickly as possible to be able to meet the financial demands of the modelling that was modelled at the start of the project. It's not an easy answer. But I think with exceptional planning, we can certainly meet that challenge. That needs to be part of your modelling. You need to be costing mobilisation into your modelling from the beginning. It can't be a secondary thought. So, to your question, well, what do we do while we're expending resources on existing operations? It's not the same resources. You need to be planning for additional resources that focus intensely on mobilisation 6, 12, sometimes 18 months out, depending on the nature of the project. So I think costing that in is really important, and understanding that that's a separate resource that needs to be dedicated depending on the scale of the project.
Thank you. Did you want to respond, Shaun?
A mobilisation program isn't 30 days, 60 days. It's 12 months or longer.
Yes.
And it seems to be missing from a lot of the stuff that we review. And like I said before, you don't just turn up with 250 tenants on day one. You don't turn up with them on week one, month one. There's a staggered process to this. It's highly resource intensive, and if you're lucky enough to have multiple projects going on at the same time, or doing things like that, that's a critical drain on the resources from your operations team. But it's a longer process. It's not as simple as the way it's set it up. Is it's a 12-month to 14-month process. That gives you the leeway around the build completion time. If it's delayed, if it's moved, you've got enough in the contingency, in that program for things to move a little bit, rather than just setting yourself up where I've only got money for 60 days to market this thing and get it tenanted. Is incredibly challenging, particularly once you move out of the we all know where the social housing tenants come from. The affordable market is a difficult market to access. Like a snap of your fingers.
So the more certainty that there is within the system operating in a context of uncertainty, I would say that, those are the principles. I think, oh my gosh, I got 25 hands up. I think there was someone over that man there. You were next. You were next. And we've got 4 minutes until we break for lunch. So I think this might be the last question. So thank you.
My name's Victor Hunter. I come from the Kimberley. And one of the things that I find really interesting is the fact that we have people in government making decisions about people in Indigenous communities. They've never visited there, they've never spent time with the Indigenous people, and vice versa. It's like railway lines, white and black railway lines. They run side by side, but they never meet. The thing is, we're still practicing mores where mother-in-law avoidance is in place. And when there was a guy in Social Security, and he had a really interesting idea where my uncle had 2 wives. And so he said they got paid at 0.5. The guy with 3 wives, they got paid at 0.33. Now, these things operate, but what we don't have is the knowledge about if you go north of Broome and you want to put down a cement pad, concrete is $1,375 a cubic metre. But people still go ahead with that. And the high cost of mobilisation and demobilisation of the workforce, and then into that comes fetal alcohol syndrome disorder. If you go to any of the northwest towns to buy a six-pack of cider or a bottle of beer, you have to have your hard copy of your licence, otherwise you don't get served. Now, they say it's a trial. It's the same with the cashless card. They say that's a trial. The company in North Queensland that gets paid to operate that cashless card system, they get an average of $10,000 per participant. There's no get out of jail card. When it comes to housing, no one thinks about using the local community people as a labour force. And so my question is, how do we get people in government who are making decisions to get first-hand knowledge before they start making those decisions? To build a 4-bedroom, 2-bathroom home in the north, $830,000, or the company won't even get out of bed.
Thank you.
No one uses the local community to be part of the workforce. And this is where our foundation has gone to a community. We're asking the government to allow people in the community to access a housing loan from a financial institution and be eligible for the $10,000 first homeowners grant. They can't get either because all the blocks are on one lot number. Now, these are the things that we've got to deal with, and on top of all of that, low attendance rates at school, and we've now got fetal alcohol syndrome disorder, where children are being born to parents who have already been diagnosed. In one community, there was a lady. At 14, she was a mother. At 27, she was a grandmother. And at 61, she died. That's not outside the norm. Thank you.
Thank you, Vic. Thank you very much for your comments and your observations. And I think that really goes to the point of everyone that works in housing policy and delivery needs to understand the communities and the needs of the communities that they are planning and delivering for, particularly in First Nations communities. So thank you. I'm sure that's been heard. Would anyone else like to comment on that? Because we're actually at time. So thank you for your comments and your questions. And thank you to everyone that attended this session and your really insightful questions. And also to the panel, thank you very much.
Well done, Karen.
Thank you.
Thank you.